So let's check in with our reporters who've been looking at some of the stories beneath the numbers. I mean, we certainly have a rally on our hands with the NASDAQ outperforming the other two major indexes. But I know, Abigail, you've been looking through some numbers, some charts. What do you have for us?
Well, Scarlett, you're right about that. Let's check in on a favorite chart here of the S&P 500. We've looked at it so many times over the last 6 months or so, it's hard to count. It goes back to 2017. And the main point to make about this chart that holds true after the recent volatility, we're looking at a sideways trend, very roughly, let's call it between 2,600 and 2,900, a battle between the bulls and the bears. All of these whipsaws, the S&P 500 overall not moving much from its last two all-time highs, about 1% in that range. Now, we, of course, had that big move lower recently, then the rebound rally last week. Net, we're slightly above the 2,900 level, or actually slightly just below it, but we have the S&P 500 back above the 200-day moving average. There is some reason to think technically that we could briefly go up or above 3,000. The bigger message or question around this range, though, Romaine, is which way does it break, to the bulls or the bears? It will produce a massive move. Right now, though, the RSI may support as it moves back up toward overbought levels. That, again, there could be a near-term rally for the S&P 500, but probably relatively brief, Romaine.
All right, thanks, Abigail. Well, a Chick-fil-A restaurant just opened up down the street from the Bloomberg World headquarters here in New York. This is a nationwide expansion by the once Southern fried chicken sandwich chain. And a note out from Bank of America analysts basically say this spells a lot of trouble for companies like McDonald's, Jack in the Box, Wendy's, and of course QSR, which owns the Popeyes and Burger King's brand. This is a note out from Greg Frankfurt, basically saying that if this expansion continues the way that it's been going, a lot of these companies are going to face pressure. He specifically cited a lot of competition already in the Southeast. He said that's already expanded to states like Delaware, Massachusetts, and Maryland. He also singled out Texas, where Chick-fil-A has grabbed about 17% of the market share in that state, a state that it really wasn't even in just a few years ago, grabbing about 40% of the growth. He's saying that's had a huge impact on Jack in the Box and on Sonic Corp, which is, of course, private. He also says that the competition should increase as other companies, sort of like Shake Shack, also start their nationwide expansions. He also pointed out that Chick-fil-A has a much higher sales per unit per store compared to the rest of the industry. Emma?
Romaine, I'm taking a look at EM as developing market stocks are headed to their best day since January. Take a look at this G chart that we've got for you. It should show you the MSCI Emerging Markets Index. You can see we're putting in a gain of around 1.5% today. As I said, the best since January. The catalyst, of course, President Trump's decision to call off that planned increase on tariffs on Mexican imports. It means we've also seen the Mexican peso rally today having its best day in almost a year. Investors cheering the de-escalation of the trade war. Of course, the index has struggled somewhat as the trade war intensified, and you can see that on this chart here, especially with through what happened to the index through May. And that means if you take a look at the index, its performance year to date, we are up around 6%. That is a gain, but it's about half the gain of the MSCI's all-world index.